Well, today marks 30 years since the Australian dollar was floated by the Hawke government, and what a wild ride it's had. Debuting at 90 US cents in 1983, it's been as low as 47 US cents following the Asian financial crisis and dotcom boom. And after another hiccup during the GFC, it peaked at $1.11 at the height of the commodities boom. So the question is, where to now for the Australian dollar?
It was 1983. Australia's economy was in recession with unemployment at double-digit figures. Managing a peg currency was becoming all too difficult for the government, with speculators profiting at the expense of taxpayers. So came the decision to float the Australian dollar.
We'll have a much more flexible and responsive exchange rate management regime.
Today, Paul Keating reflected on what ultimately led to the deregulation of the Australian economy.
We did it as an express declaratory policy from the start.
Stephen Walters remembers the float well. He started his career in banking at the same time.
No one really knew what was going to go on, so in fact the currency didn't move much at all. It was quite in hindsight, looking back from 30 years, it was quite an underwhelming experience.
It proved to be a more challenging experience for some businesses exposed to currency moves, especially to the upside. Costello's Opals has been operating for 55 years.
Demand is there for the upper end, but for the more commercial quality, certainly it's dropped significantly, 20, 30%.
The business had to adjust to the changing environment.
Control your cost, look for new markets, service your existing clients better.
Manufacturers have been feeling the effects of a strong dollar, highlighted by Holden's decision to exit Australian production.
It's really only been the last 4 or 5 years when the exchange rate's been going up. That's added to the pain of manufacturing, but clearly the evidence suggests there's something much more profound going on.
The recent mining boom has been credited with the dollar's strength, but experts say without a floating exchange, the economy would have other problems.
We would have gone through this boom probably with a big inflation breakout. The Reserve Bank would have been hiking interest rates, not lowering interest rates. The economy could very well be in recession.
The Australian dollar is now trading close to the level it floated in 1983. But the Reserve Bank still thinks it's uncomfortably high and is considering intervening in the currency markets to support more balanced growth in the economy.
I think to get them to actually intervene, I think you'd really need to see evidence that the exchange rate is just not responding on the downside to either interest rate cuts like we've already seen, or perhaps even interest rate cuts early next year.
Some economists argue an exchange in the mid-80s would be a handy equilibrium. In the meantime, the Australian dollar continues to be a global trader's favourite, with a daily turnover of $460 billion. Ricardo Goncalves, World News Australia.